Okay, folks, we are live. Welcome to Sunday Night Futures Live. What we're going to be talking about tonight is obviously the futures action. We'll be talking about the QQQ rebalancing, which begins tomorrow or takes effect tomorrow. We're going to talk about a video I did and aired this morning about the reindustrialization of the United States. And one sector that I left out kind of intentionally, but I want to review it tonight live because I'm going to keep elaborating more on that video in part one, part two, et cetera, et cetera. So the one sector I want to talk about tonight is robotics. We're also going to talk about earnings coming out this week. We're going to talk about our week last week. How do we do as we scroll through some of the charts? And let's begin with saying hello first. And hope everybody had an awesome weekend. Pete, Mr. Pete, welcome. Franklin, welcome. TZ Burton, welcome, sir. Thank you for the comment today. RB, hello, Bob. Happy Sunday. Can you please cover AMD? You got it. Denny, welcome. Okay, so Mara and AMD. I gotta get my trusty handy dandy pencil out. So let's share my screen because we do have the futures that are open, and AMD Mara. Okay, you're in the books. Tim, welcome. Seymour Rivers, welcome. Thanks for the commentary. Very much appreciated. Okay, let me share my screen. I am sharing my screen. Okay, good. So thank you, Mr. Producer. So here we have the E-minis are open. These are actually the micros. Same thing, same price action. And we are flat, biased to the upside. I'm looking at RSI here. Keep in mind, this is a 5-minute chart, so very volatile, but RSI is rising. Stochastics are oversold. Equities are beaten down for the most part on Friday afternoon. So looks like we're getting a bit of a pop here. Now, as we begin to look at the NASDAQ 100, that's going to be interesting because by and large, these are your triple Q names. Now, the NASDAQ 100 probably not going to be any impact at all, or perhaps there will be, as far as I know, relative to the triple Q call. But in fact, right now, they're up greater than the S&P 500, up 0.17%. So we'll see tomorrow how the Qs open relative to the NASDAQ 100, whether or not they're tightly correlated, which they usually are. But I'm not sure about a rebalancing, how that's handled, how they balance out the NASDAQ 100 versus the Qs, even if they do. I don't know if they do that. So we're seeing a new session high they put in here. Looks like a pretty good open. Nothing's astounding. What I want to take a look at next is the Dow. The Dow is showing real promise. The Dow Jones broke out last week, and we're down on the session so far. You could see they sold off on Friday afternoon. The Qs sold off hard. And I'm going to go to a chart in a moment showing the Dow transports, which I don't have up here right now, showing their outperformance versus the triple Qs, how that's now ended. And it's a pretty interesting chart. So Dow Jones, let's call it flat with a bias to the downside at current. A relatively quiet night. Russell 2000. Flat. Not much going on here. When I look at this chart, the first thing that pops out, let's go off of a 5-minute chart. Let's go to a 15-minute chart. Less volatile. But here is your downtrend channel. We broke down below the lower band here. We're trying to fight back and recapture it now. We'll see what happens. Possible higher lows on RSI. Stokes are pretty oversold. So I think we could get a pop here. Back to a 5-minute chart. Now, looking at the dollar, the dollar had a big reversal week last week relative to the euro and the yen, closing just off the highs of the week. Why does that matter? We're long of emerging markets. We like emerging markets. We want to buy more emerging markets. We can't do that if the dollar's going up. Same thing holds true for gold mining stocks, silver. So right now, we're looking at a open about flat relative to Friday's close. Now, pulling back, I want to go to a weekly chart. I want to start talking about other currencies, in particular euro, yen, because they'll give us a clue of as to how the dollar may perform this week. Now, both of these names, the euro first off, had a pretty bad week last week, and we're beginning the week uh, lower, but at a support level. Actually, we're now up on the week. Oh, you know what? I don't know why it's showing green here. Let me go to the intraday chart. Green here, red here. 5-minute chart. All right, they opened it higher. It's trading lower than the high. That's why it's showing red on the weekly candlestick, and then it must be calculating euro relative to Friday's close and the price performance. Gotcha. Now we're good. Okay, back to the weekly chart. Now we're holding support. Can we see a breakout here? No doubt about it. The path of least resistance is still higher for the euro. We're right at critical support. Now, looking at the yen, no new weekly lower low yet. We're right at support. We are putting in higher lows on RSI. And again, folks, a lot of you may be saying, why is he bothering with the euro and the yen? It's not even the US dollar. What are you doing? The reason is that as goes these two currencies, so goes inversely the US dollar. So if you're interested in buying gold, silver, whatever, anything priced in US dollars or has a history of trading inversely of the US dollar, you need to know what the dollar is going to do next. To best understand what the dollar is going to do next, watch the euro yen. Watch that relationship. If both go up, dollar goes down. If yen goes up, euro's flat with a bias to the downside, dollar may still trend up higher. If both euro yen go down, dollar goes up. As you saw last week, both of them were down, dollar up big. So we can't ignore that relationship. And in fact, it's a tool to help us. Now, sticking with the commodity play for a moment, or the impact on currencies to commodities, we're going to segue, as we always do, into gold. Where's my gold? I know I clicked it. /GC. I don't even need to look for it. I got this memorized. I got this. GC. Bam. Okay. So gold down $2 at the open here. Let's see what we're looking like on a 15-minute chart. I'm liking this. I got to be honest. What I'm looking at here is an inverted head and shoulder set up on a 15-minute chart. Very volatile. Putting that out there, let's talk about what we're looking at. Here is your left shoulder. Remember, this is inverted, an inverted head and shoulder setup. Left shoulder, head, right shoulder. And in fact, I believe we have the same setup on NUGT, which is a bull ETF, leveraged ETF of the gold mining stocks. So let's see whether or not we put in a new daily higher high. Yeah. And we're good to go. I'm going to bring up that chart of NUG. Oh, before I leave here, quick look at RSI, higher lows. Okay. So I think that this assuming that the dollar is flat to down, gold moves up higher. And the same chart pattern can be found on NUGT. Here's your left shoulder, head, right shoulder. Obviously, this is not trading at current, but we'll look and see if we get a breakout tomorrow. Hey, Pat, long time. How you doing, pal? Talent, like money, right? Okay. Jeffrey. Good evening, Bob. I always appreciate you. You're very welcome, Jeffrey. Thank you for being here. Appreciate it. Uh, yeah, I think RB they complete it tomorrow. I have the article up. We'll go over it and see what it has to say. But you're probably right, given the weakness in the overall market. Or I should say, in the Qs, not the overall market. In fact, we have a complete uh, divergence of the Dow Jones and the Dow Transports versus the triple Q names. I mean, it's off the charts. Tom, if this happened, it will change BRICS, will be second class choice. Are you talking about the currency, go back currency? How about, I'm not sure if Texas used blockchain OZ to replace all official money. I heard about them trying to issue some sort of a currency down in Texas. Uh, I'm sure that's going to get challenged in court. I don't know whether or not they're going to win that one. Okay. Let's keep going on here. We did gold. Now, of course, we want to sashay over and into silver. Silver also being an industrial metal. And silver is down on the session fraction, by a quarter percentage point. So not so fractionally. Let's stick with the precious metal names. Palladium, we were long. We booked profits. It's pulled back now. Do we have anything going on here? Any type of a setup? Maybe. 4-hour chart. We really got to see a four hour breakout here. But I do think that we're going to move up higher, especially if the dollar uh, fails to make a new weekly higher high. Moving on, let's go back to 15-minute. Move on to palladium. Actually, I'm sorry. We were long on platinum, not palladium, platinum. I always get the two confused. And we got the pullback here. So I stand corrected. I correct myself. Platinum. So yeah, we're looking to get back into platinum. We have broken back out here. 15-minute chart. 15-minute Stokes, a little bit weak here. I wouldn't be a buyer at the open. Unless, of course, the dollar gaps down. Now, what I want to start paying attention to on a weekly time frame, and I haven't touched upon it all that much, but since we're talking a lot about the reindustrialization of America, we want to watch copper, Dr. Copper, what it is doing. Because if, in fact, we have a global infrastructure blowout or a build out, you need copper. And copper is in a very, very tight wedge formation. So we'll be watching this. I want to know if and when copper breaks out. And we'll probably get long of copper. Sticking with commodities, let's go to energy. Energy had a very, very good week last week, at least oil, energy stocks. Nat gas looks poised for a breakout here. What's up first? What do we have here? Where's my light sweet crude? That's not what I wanted. Light sweet crude. Okay, light sweet crude, a very good week. last week. The trend is still up. Looks like we're opening down at current. How severe? Down about half percentage point. Now, nat gas last week. Nat gas is up. And I was hoping for a pullback or a flat session. Let's go to the 5-minute chart. Yeah, this is already up nearly 3/4 of a percentage point. So I think that we're going to get a breakout here on natural gas this week on a daily chart of UNG. And if you like the volatility, Boyle's a leveraged ETF. Both had doji star formations on Thursday and Friday, sitting on top of their 20-day moving averages. Looks as though they're getting ready to pop up higher, and we're putting on steam here. Now we're up 0.77%. So we're going to be up tomorrow morning. So we're looking for a breakout. Maybe we'll sell puts, which is a long bet, not a short bet, and play it that way if it gets away from us. So more to come, members, and we will look for some opportunity in this space. Now, energy, we've completely look at agriculture. Agriculture, all my preferred symbols are gone. Let's talk about soybeans. Let's go to the weekly chart because we don't track soybeans that much. Up week last week. Does not reflect this week. We hit resistance, but we are putting in higher lows. If we break out on soybeans above the June highs, we're going a lot higher. Okay, moving on to, they took away all my symbols. Here we go. Here we go. Corn, weekly chart. Up week last week, but still under some pressure here. You saw some selling come in at the back half of the week. What we're looking for, the reason why we track agricultures, the metals and whatnot, we're looking for signs. We're looking for signs of inflation or the lack thereof. So we're not seeing a breakout on corn prices. They tried to break out a few weeks ago. That failed disastrously. So corn is in check. It isn't firmly in a downtrend still. Wheat prices. Now, wheat prices broke out last week. Now, I want to know when we break out above the June highs. And we were close to it last week, but sellers moved in and sold that strength. What did I miss? I know I missed one. All right. We'll live. We'll live. Okay. Rice. Not much happening there. Okay. Larry. We're in earnings recession, but earnings have not performed yet. No, I have a chart too. It's pretty fascinating. Too soon to buy stocks. Stocks are still expensive. Very much so. Couldn't agree more. Bob, I think NRT is great for 22% dividend. Do you think that it could replace the T-bill? What is the NRT? I'm probably showing my age right now. I don't think this is what you mean. What's the NRT, Tom? Yeah, please smash the like button, madman. Thanks, Tom. Okay, let's get to our regularly scheduled programming. Okay, so Do I want to touch upon this right now? Yeah, just real quick. I highlighted this. This is kind of out of order. I didn't want to start off with this, but since it popped up, I don't want to not address it. Monetary versus fiscal dissonance and return of QE. This should really be right now next to my yield curve play. In fact, we're going to save that. Tease, tease. All right. Valuations. To Larry's point, valuations are, even after all the earnings that came out last week, valuations are about the same. And if you think about it, the triple Qs were down. So technically, valuations are higher than what they were this time last Sunday. Stocks are more expensive even after Tesla's earnings. Who else reported? Netflix earnings and a couple of banks. So here's a chart that should really drive home what we're seeing thus far in Q2 earnings. Now, I keep saying this over and over again because it matters, because the markets are going to price the market accordingly, according to how they see the data roll out. The analogy I use is that it's election night, and there's no hanging chads or ballots that are being stolen, blown pipes in the election booths or anything like that. It's a fair election. So there's no issues with the vote tally, and you're watching your favorite talking head on CNBC or whatnot, and they're calling states with only 20, 30, 35% of the vote tallied. It's because they have an algorithm that just tells them there's no way that this guy's going to win with this reporting already in. So early on in the contest, they're able to call the winner of that election way before all the votes are counted. The same holds true with earnings season. And when you have a valuation that is this lofty on the S&P 500, and you already have a 20% of announcements thus far in the S&P 500 are below consensus. Only 4% are in line. 75% are above. The however there, because that sounds great. Wow, this is what they always want you to see. The however is, according to FactSet market research, 75% of S&P 500s have beaten EPS estimates to date for Q2. That is what CNBC would stop at. They would stop talking. That's what they want you to hear. Go buy stocks. Be happy. But if you read on, and credit to FactSet, which is below the 5-year average of 77%, but above the 10-year average of 73%. But on a 10-year average, you do not have a PE multiple of 31.62. This is an anomaly. It's an anomaly. And you cannot afford to have EPS growth that is 75% in line and far below, not far below, below the 5-year trend. I don't think it's going to hold up. This coming week, we're going to have a lot of earnings come out, and I think that this is going to be one that could tip the scales this coming week, because you have Microsoft coming out. You have a lot of big names coming out, many triple Q names. Now, Staples, I find this very interesting. You take a look at the chart of Staples last week. Maybe there's only a few reported so far, but Staples broke out last week, and 25% of the reported earnings so far are below estimates. 0% are in line. So it leads me to believe there's probably only a few companies in that bucket, but something to think about. Now, earnings coming out this week, not much happening tomorrow. As you usually don't get much happening on Mondays. On Tuesday, though, different story. We're going to get in the pre-market, 3M, GE, Spotify, after hours. Here's where the rubber's going to meet the road. Microsoft, Alphabet, Visa, Texas Instruments. Then on Wednesday, pre-market, AT&T, Boeing, Coca-Cola. Got some down names there. Union Pacific, watch out for that. That's a transport. The transports have been on a tear of late. Meta coming out after the close on Wednesday, Chipotle. And what else do we have here? Pre-market Thursday, McDonald's, MasterCard, Valero, Honeywell, Ford after the bell on Thursday, Roku, U.S. Steel. Watch out for that report. And on Friday, we have ExxonMobil, Chevron. So begins the energy stock rollout. We also have P&G. That's a staple name. And Colgate-Palmolive as well on Friday. So a very, very broad array of earnings that'll touch upon many different sectors coming out this week. And it'll give us a real glimpse of how the quality of the earnings are or how they are not, and who is outperforming, who's underperforming. And I think that the Qs, they're going to have their day in court this week. So watch the performance of the Qs post Microsoft Alphabet reporting, as well as Meta, and I think that's it. Oh, we have Intel coming out this week as well. All right, so technically, every once in a while, I like to come back to the bulls versus bears. And this is a measure of bullish sentiment. And it's now broken out to levels that are not healthy. We are now surpassed on a monthly time frame the highs last seen back in June of 2021, and you could see what happened back there. We went into, this is the S&P 500, and you can see that it went into a correction. It doesn't always have to be this severe of a correction. We spiked up back here, even to a higher level back in December of 2017. We had a minor correction, nothing serious, but just keep in mind that the stars are in alignment here, given valuations and given the bullish sentiment, along with the catalysts that are out there vis-a-vis earnings that could send this market moving lower. I'm not going to touch upon the fact that we have a Fed rate meeting. I'll mention it. They're expected to raise interest rates. They're going to do it, 99% of probability, and they never disappoint the market. So they're raising interest rates. The question is, do they raise into the following sessions? Right now, the market says yes, but that could change on a dime, given earnings, given economic data, given the Fed speeches post this new announcement. My guess is that after this new announcement they come out with on Wednesday, the talking heads are going to come out from the Federal Reserve Open Market Committee. They're going to give their speeches, and now they're going to jawbone a little bit less hawkishly. They jawboned way too severe hawkishly post last meeting because they paused last session, and they did not want the markets to think that there was a pause and they are done and we're probably going to go into rate cuts. They did not want to do that, and they succeeded. Market participants fully expect a rate hike this week, and they fully expect a rate hike each month that they have a meeting going into the new year. But that can change. Now back to my earlier tease. Monetary versus fiscal dissonance and the return of QE. Monetary and fiscal authorities are currently running what we believe are unsustainably divergent policies. The stimulus rise in the cost of debt by central banks and their deliberate reduction of balance sheets is entirely I practice this word. I practiced it and I had it. Incongruous with the exponential growth in government debt. I tried. Give a like for the try, please, and the public humiliation in front of what? We have 34 people here. Public humiliation, but I tried, and I will persevere. I will move on. All right. So, in short, what they're saying here is that the Federal Reserve, as we go over every Thursday night when this data is released, has been very aggressive with reducing the size of their Fed balance sheet. Yet, the federal government has increased their spending dramatically, and they plan on spending at a bare minimum $4 trillion between now and 2025 because of that debt ceiling giveaway that the Republicans gave to the Democrats. And they're not going to vote on a new debt ceiling package until after the next election. Kevin McCarthy is the worst House Speaker, at least Republican, in history. In history. For him to make that deal, he might as well put a D next to his name, or put a rhino next to his name on any post that he's on the congressional record. He may as well be a Democrat or a rhino, but he's no friend of ours by a far stretch. I get very excited. By a mile, he's no friend of ours. So they're reducing their balance sheet, yet here is fiscal spending. So the federal government expects that the governments around the world are going to pick up our tab for a debt they know that we're never, ever going to be repay. I don't think so. At some point in time, they're going to have to go back and they're going to have to tell the Federal Reserve, who's independent, hey, Jay, we're going to create a crisis here. And what you're going to do is, Jay, you listening? You're going to print like there's no tomorrow. Yeah, we're going to spend to get us out of this, and you're going to print like there's no tomorrow. Do you understand, Jay? Yeah, you got it. Yeah. So right now, our interest payments are skyrocketing. They're equal to the defense budget, over $800 billion, knocking on the door of $1 trillion a year. Yet the Federal Reserve's ownership of federal debt is actually declining because they're doing this. They're rolling debt off their balance sheet. But the one thing I want to point out here is that the roll-off of the debt each week has gotten less and less versus prior weeks. So it looks as though the rate of change on the reduction of their balance sheet is beginning to slow. That means that we're probably going to do one of these: bottom out and do what we did back in March because of a crisis. We had the regional bank crisis. They're going to spike it back up again. So what happened back in March that should have every equity owner that is a bull very, very concerned? Let's take a look at our friendly chart over at the yield curve. Folks, you join me every week. I talk about this. I'm going to skip the definition. I'm not going to bore people. If you want a definition of what the yield curve is, leave a comment in the box. I will more than happily do it, but I don't want to waste people's time because it doesn't look like my audience each week is growing all that much. So I'm making the assumption that it's the same people, and I don't want to bore you to tears. So what happened in March? We got a steepening of the yield curve. What happened to equities back in March? Overlaid here in gray, equities paused and they took a little bit of a nosedive, but then they soundly, where's my March? Right here. They soundly rebounded. It's blocked by the blue line. They soundly rebounded as the Federal Reserve bailed out depositors, not the banks. They bailed out depositors. So right now we're up on the month on the steepening yield curve, and we are well off the highs of the month. We'll see what happens, but the Federal Reserve is soon going to be going back to the printing presses because there's no way that China, Japan, whoever else is out there crazy enough to buy our debt is going to do so. In the U.S., the impact of such high levels of government expenditure is evident in the data. Excluding tax receipts have declined, folks, which have declined to levels comparable to those during recessions. Fiscal spending alone represents a substantial 25.4% of nominal GDP in the U.S. That is higher. Think about this. That is higher than what we experienced after the global financial crisis or any other crisis in history outside of the COVID recession when the economy was in full lockdown. They're spending more now historically than they have during crisis. Think about that. What's their deal? There is no accountability, but it's going to come home to roost at some point in time. How do we know that? because the yield curve is telling us there's something very, very wrong. When you have 2-year yields paying not a little bit, a lot of bit more than a 10-year yield, that's a problem with the yield curve. There's something very, very wrong in the bond market. It's priced in. Banks borrow short to lend long. They're not making money on their net interest margins. So the money center banks, what are they making money on? Making money on trading predominantly. I saw this video, and it was the second video I saw today, and it was of the video I put out yesterday, or this morning actually. I recorded it yesterday, produced it today, about the reindustrialization of the United States. And in my research of manufacturers that had not offshored, but they remained in the United States and in the textile industry, no less, of all industries, they stayed in the United States. And you're seeing even textile work come back to the United States, if you can believe it. What's the key? The key is this, and this is out of Boston Dynamics, and this is a minute and 24 seconds, but watch it. It's really, really interesting. Pretty amazing stuff. And the reason why I wanted to show you this, and I went back to try to find this one video, is of this professional table tennis player. He was playing against a robot, and the dexterity of this robot was incredible. And he beat the guy. He beat the guy. That's how incredibly flexible this robot was and agile. So going back to the manufacturers in the textile industry, they're relying heavily. These are privately owned corporations by and large, because if you're a publicly traded corporation, it's very hard to reinvest capital into your business because you want to pay it out to shareholders. You're always worried about the next quarter, so you don't want to spend more on investment because it takes so much time to get the money back on that investment. But these private companies that aren't relying upon quarterly earnings reports, they're pumping they have been pumping their earnings back into infrastructure, robotics. And a few videos I've watched in preparation for the next series I do on the reindustrialization of America is that what's critical to the productivity of these companies is investment in robotics. And this is a chart here, a couple of charts. World Robotics Report. This is as of October 2022, a little bit dated. This chart is only as of 2021. World Robotics Report, all-time high with 500,000 robots installed in 1 year. Look at the rise here in the use of robotics. And when you take a look at the countries that are adopting it, China, I don't know how they're going to sustain this, to be honest with you, because their population is, you have a lot of people that are unemployed over in China, and they're not going to be none too happy being replaced by robots. And Japan is number two. Sorry about that noise. That was my software shutting down. Japan number 2. We're only number 3. I think that with the reindustrialization of the United States, you're going to see that skyrocket. So I thought I had another chart here. Oh, I do have another chart here. So what we're looking at here is the ARC autonomous technology and robotics ETF. There are a couple of them out there I'm going to study. I know that uh, Franklin is probably going to bust my chops because I've been talking about this for a long time now, about getting into robotics and technology, but they've been weak. And I've been looking for support. And I think that we find this is a yearly chart. And it looks like so far this year, we have an inside bar on the week. And I think it's time to begin really getting involved in this space. And this is going to become part of our reindustrialization of America portfolio. What's in that portfolio? If you can go back at your leisure and check out the video, but we're going to be looking at utilities, MLPX, which is global infrastructure, energy infrastructure build out. Many names. Check out the video. It's posted on YouTube. Also posted on my website as well. To thecontrariantrader.com, link below. And this is a yearly chart of the ARC fund. It is up 39.21%. Now you may be saying, you know what, Bob? The triple Qs are up. I had it before. The triple Qs are up 41.48%. Why do I want to be so aggressive here when the Qs are outperforming? The reason is that you take a look at the Qs on a technical basis relative to robotics, you could see that the Qs have had a long, long run already. And they are at massive resistance and they're beginning to peter out. I'm not saying they're going to crash. All I'm saying is they're due for correction. Whereas the ARKQ on a weekly chart, it's had an okay run. But I think that this has a lot more upside potential than does the triple Qs at this point in time, given their lofty valuation and the growth rate of these companies are far beyond that of triple Q names. So I like this sector quite a bit, and we will be looking towards building positions. This is optionable. That means it's right up my alley. I love trading options. So we will be involved with these names in the very near term. Now, sticking with the Qs, I mentioned this before, on July the 25th, the 24th, tomorrow, the NDX. Oh, this is the NDX, NASDAQ 100. That's the futures. Okay, we were talking about this before. So the Qs already had their, to Talon's point, I think it was Talon, already had their adjustment. It's going to be the NDX that is going to be changing. Will undergo a special rebalance, which is meant to curb the high concentration. So they're going to balance out the NDX to be more in alignment with the triple Q names. I misread this earlier. Good. That's good to see. All right, good stuff. So expect a little bit of volatility in the NDX tomorrow, and that will affect the NASDAQ 100. Okay, triple Qs, daily chart. We closed at the lows of the session, and we're not at support. I think we're coming down here to 370, and probably going to rally, and I'm going to look to reshort. We booked profits last week on our long put trade, and we're going to look to reopen them up on any rally up and into this prior support level. I call this the Talon bear flag setup, and it is now broken support. We're looking for a rally back in an effort to recapture, and we'll be looking to short into that retest. Now, if Meta or who else is coming out this week? Meta, Microsoft, I didn't mention this before. Alphabet's coming out this week. These names disappoint. We may be shorting in advance of any retest because we may not get a retest. So very long in the tooth here in terms of extension relative to historic norms. So we're looking for further pullback here on the triple Q names. Now, of late, here's the triple Q ratio chart relative to the Dow transports. And you could see that the Qs were outperforming the Dow transports, but that all ended the week of June 12th. And we have since seen a rally beyond the performance of the triple Q names by the Dow transports. The thing to keep in mind here is this, that rally appears to have run its course. Now, I don't think there's much more upside potential on the triple Qs. The Dow transports have had a nice run. My guess is that we're going to probably see a pullback on both. And if you take a look at the Dow transports, you'll see what I mean here. They have had a heck of a run. I don't have my Bollingers up here, but we are flirting with the second 2 standard deviation Bollinger Band, and this rally is a little bit long in the tooth for the Dow transports. And you're already seeing a bit of consolidation, perhaps topping action. Maybe it's going to be a continuation breakout. I don't know yet until such time as we break support. So we may be looking to put a short trade on the Dow transports, and for that matter, the Dow Jones Industrial Average. This is the DIA, and we're probably going to be looking to short these names as well as soon as this week. Now, as we talk about the consumer and the amount of debt that they're in, and the fact that interest rates and the availability of credit, applications for credit are at 20-year highs, according to the New York Federal Reserve. So Tesla, and this is what every other car company is going to do now, Tesla attempts to stoke demand with an 84-month lease. Think about that. A loan, not a lease, I apologize. Loan. Think about that. 84 months of a payment on a car, a depreciating asset. In general, 84 months are less common. Normally 36, 48, and 72 months. This is bananas. This is absolutely crazy. But due to the fact that interest rates for automobiles, I mean, you're at multi-year highs, decades highs on these cars, and the prices of these cars are at astronomical price points. Scary stuff. And you also have this going on here. Credit delinquencies, including housing, have now risen above 2009 levels. We all know what happened back then. You had an implosion of the economy. Here you have it. Delinquencies on all loans and leases to consumers, credit cards, and all commercial banks. Look at this. And when you look at these charts, you have to look, the way I look at them is I look at them relative to historical bubbles in the market, 2000, 2007, 2008, 2020. And here we are yet again. And with a yield curve, hate to keep bringing this up, but this has got to get resolved, and it will get resolved, and it's not going to be good for stocks. I don't want to be the doom and gloomer here, but we can't ignore this. To ignore this is whistling past the graveyard. Lastly, we'll go to stock chart requests now. Gold, we're still bullish on gold. You have central banks. They are just loading up on gold. Central banks have been on a gold buying spree, amassing a record 1,224 tons in the past 4 quarters, leading up to Q1 of 2023. Boom. Let's do some chart requests. Folks, chart requests are brought to you by friends over at TrendSpider. They give me and I give to you, a 35% discount code linked below, CON35. Take advantage of it. Will, awesome video. Thank you very much, Will. Appreciate that. Thank you. Madman. Talking about the futures action? Hopefully military won't preserve The robot and sacrifice. Yeah, right. Yeah, right. Scary thought. AI robotics, new world, no doubt about it. No doubt about it. Yeah, it's terrifying, no doubt, Kelly. It depends upon who's at the helm, right? Who's driving the ship, and the lugheads that we have both on the Republican and Democratic sides of the aisle. Uh, I wouldn't trust them. I don't trust them at all. I mean, there's no measurement of trust that I have or faith in their competence at all whatsoever. So yeah, I'm with you. It's terrifying. I'm already on a government list. Wonderful. Uh, Joel, isn't I? That's a great point. I don't know, and that's we always look at the components. Always look at the components. I'm glad you brought that up. I have not gone into the components. There are other funds out there that are in that space. I have not committed to the ARC funds. I certainly don't want a fund that is 15% Tesla, where Tesla is right now in their technical cycle, and in terms of their earnings were not great. So. Uh, Good point. Thank you for bringing that up. Okay. When do you envision the turn down on NDQ and B? I think that if the trend in earnings continues as is, which is basically for the high flying Q names, not wonderful. I think that it's going to happen pretty immediately because the message is going to go out. Earnings are not good. The markets are already expensive. They're expensive going into this earnings season. They remain expensive. There's room to the downside, not much room to the upside in terms of valuations. So even if they meet or slightly exceed expectations, I think there's more downside risk than there is upside potential. J&J. That being said, the banks broke out last week. They look pretty good. ROK, they report next week. ALGM. All right, let's do it. I gotta go to the numbers area. Good thing I checked. Thomas, 3M. Okay, so keep in mind in the Roku 3M report this week. I believe 3M is tomorrow morning. Let's validate. That could be wrong. Let me make sure I'm right. We always want to be accurate. Sorry, Tuesday morning. Okay, let's get to it. AMD first up. So it's not looking good here for AMD. AMD is struggling. If you're going to be very, very disciplined and you're going to use a stop loss order, fine. Buy the shares, put a stop right below last week's low. We close right at critical support. If it closes down below, let's call it 110 per share, AMD is in trouble because you have a lower high, and if it breaks and closes down below, what was the low here? Low was 107.46. If it closes down below that low, so that means you have a double top and then a breakdown to a new lower low. What does that mean? Lower highs, lower lows. That's a new trend, and it's not up, it's down. It's a new downtrend. So be very, very careful. We're at the precipice here. I don't believe they've reported earnings yet. Correct me if I'm wrong about that. It broke support on a daily time frame on Friday. It did attempted recapture. I'm not liking AMD here. I would avoid this. In fact, if it breaks down to a new lower low, I think it's short. You short it, at least for short-term swing trade. That's it. look for a price target down at 102.55 per share. If we get down there, that means we have a weekly breakdown and we're in a new downtrend. Be very, very careful with AMD. It is struggling at best right now. At worst, it's breaking down. Mara. We're not going to want to touch this right now because what the algorithm's telling me here is that we have resistance immediately above. We hit it last week or 2 weeks ago and we backed off. Maybe they're recharging the batteries and trying to get enough buyers gathered up to take another run up at this. The question is, do they have enough to overcome the sellers that are up here? The jury's out. We never know that, right? So what we like to do is look for a pullback to a daily support level or a weekly support level or a monthly support level. Do we have one here? Not in a monthly time frame. What I'm doing here is I'm using the automated trend line functionality. I'm overlaying monthly support on top of, or resistance on top of, a weekly chart. Nothing going on here. Let's go to a daily chart. Not much in terms of daily support with the exception of the 9-period moving average. So you'll know they're going to take another run up at that resistance level, which I believe is this here at 19.83, right here. They're going to take another run at this if you get a breakout above, let's call it 17.75 per share. They'll probably take another run up at that. That would be a trade for swing trade up to that point if you want to do that. I wouldn't be a buyer until we close up above, let's call it $20 a share. That would have me excited about the shares. If you're going to use a tight stop, nibble here, small position, tight stop right below the lows of last week, and add more as you begin to break out above this resistance level. Then, of course, more aggressively as you break out above $20 a share. This will be in red, your rising upper band of resistance. That's the beauty of having these automated trend lines. J&J. Now, they reported earnings. Evidently, the market liked what they saw. This is a weekly chart. Now a 30-minute chart. I'm trying to get a feel for how they closed it out on Friday. You have resistance immediately above. I think what they're going to do here, let's do this. Let's overlay on a 30-minute chart. I screwed that up. No, that's not going to work. Let's go back to the weekly chart. What I'd be looking for here is a retrace on J&J right down to this volume shelf here at 168.43 per share, give or take a dime. But you can see that there's a ton of support down there, and I would be a buyer at that support level. Keep a little bit of sensitivity on there. And we'll keep that active for a few days. I'm liking stochastics. This is a measure of momentum, and it's building momentum. Volume was awesome last week, but I do think the best way to trade this is to wait for a retracement back down to support again at 168.43, give or take a dime. Daily chart. Nice breakout. Good looking chart. Good volume Thursday, Friday, but look for a retracement back down. That would be your best risk reward entry point on J&J. Roku reporting earnings next week. I can't say that enough. I would not be a buyer into earnings, and I really wouldn't be a buyer based upon the daily chart. Let's take a look at a weekly chart here. I would not be a buyer here. I'd be a seller. Oh, this is Rockwell. Sorry, Rockwell. My apologies. Don't they report next week too? No, Raytheon reports, but they usually report. Maybe it's not on here, but these companies generally report as a sector at the same time period, like the banks do. All right, I'm not going to waste your time here. I'm going to assume they have not reported earnings because that's the best path to take to avoid your portfolio blowing up. Well, Cal-Maine Food reports next week. Good. All right. Let's go back to this. So this is Rockwell. I was thinking Roku. Roku symbol's ROKU. All right. Sorry about that. So I would not be a buyer here. I think that, and here I'm talking bullish about automation, and now I'm going to say don't buy this stock. We rallied up into a couple of resistance levels on a weekly time frame. We backed off. So what you want to do in a situation like this is right now Rockwell becomes a show me stock. And it's got to show that it can hold the lower band of support, which is at or around, I don't know, you got to guess here, $334 per share. Where do we close? Closed at 337 per share. Now on a daily chart, and we were down on volume last week. On a daily time frame, look at what we did. I haven't gone over this chart, I don't think ever, to be honest with you. And this is the automated trend line telling me it broke support on Friday, and it did so on decent volume. So beware here. A lot of resistance above and not much support below. Where support kicks in below is on the monthly chart, which I have overlaid on a daily chart here at 316.65. So be careful. There's a lot of air down below and not a lot of cushion. There's a lot of resistance above, so be very, very careful here. I do not like the risk reward on Rockwell. ALGM. This is a first for me. Allegro Microsystems. Daily chart. I'll assume they're semi play. Bearish reversal bar last week. Not loving that. And we were down on volume. We're not getting off to a good start. You're seeing distribution on the shares as measured by volume. It was a nice uptrend here, but now it looks like what you're seeing is profit taking. Really, the only areas I like as support on ALGM are initially 47.78, but where it becomes really interesting is down at 46.37 per share. Those are the price points I'd be looking at as a support level. Let's see where they close it out and the quality of the close on Friday. Looks like it closed at the lows of the session, so I can't imagine that it looks good. And it does not. They tried to rally it. Sellers moved in. They did so on volume. You know, the market sends you signals, and the signal here is that you want to avoid this right now until such time as you get a breakout and you stop putting in lower lows, you start putting in higher lows and higher highs. We're not there yet. Dan, thank you. Dan and Pete, thank you. Roku earnings 8-1. Tom Liu, thank you. CVX just reported earnings. I thought they were next week. Or is that Union Pacific next week? Union Pacific. I haven't yet. No, I was working on the deindustrialization topic. So I haven't done any on it yet so far. So my apologies. Keep reminding me, please. I'll get it done. Usually I run out of topics after a while. WTTR, if you can, sure, Paul. And we'll leave this as the last one tonight. All right, WTTR. Folks, if you haven't liked and subscribed to the channel, hit the notification bell. I'd appreciate it. Select Water Solutions. Love this business. Everybody needs water. And this chart looks like the bomb. So we broke out here the week of June the 26th above monthly support, as noted in dashed line on a weekly chart. It would be solid line if it would the weekly support level. And we pulled back the week of July the 3rd, and we saw a continuation breakout. This is a chart that wants to move up higher, and we're doing so on volume. Price target, $9.19 per share. Daily view, strong day on Friday. We do have resistance immediately above. I would be a buyer here on a breakthrough. All right, why am I typing long add or entry? Let me explain. Ideally, what we get here is a retrace. I don't think it's going to happen. But you never know. You get a shaky market one morning, everything gets shaken out. We'll keep a lot of sensitivity on here. So if we pull back, I'd be a buyer. Oh, there we go. And we're good to go. You're welcome, Paul. Anytime. Folks, thanks for being here. Have a profitable trading week. Enjoy the rest of your Sunday. Like, subscribe. You know the deal. Have an awesome night. Be well. Bye-bye.